So, hello. How's everybody doing? So, as usual, no trade calls, recommendations. Everybody responsible for their own stuff. We're here for educational purpose only. Just the chat between traders. Everybody's responsible for their own stuff. Let's do this. So, impromptu session. Just going to spend some time, review some charts. Happy Father's Day to everybody out there. If anybody has any comments or any questions, don't hesitate to ask. I've seen some people have emailed in some questions now, too shy to ask. So live, we'll do this. I have nothing planned, no schedule, willing to go for as long as anybody wants to go. Just ask away. Yeah, sure. I mean, okay. The big question here is, starting with the ES, is what's going on here, or what's the bigger picture? Well, basically, we're in a situation where everybody has been, levered long, free money long, no stress, no fear, just get long everything. And all of a sudden, we had the market that was already struggling a little bit. It looked like a lot of distribution at highs, looked like the market was really struggling to get any real traction to the upside. And then essentially Powell came out, right? FOMC last week. And as I said on Twitter, the big thing everybody had to deal with, the big change was that, whatever's going to happen, nobody has a crystal ball. But a fact of the matter is we went from we're not even thinking about thinking to we're now talking about talking. And in a situation where everything was transitory, he didn't even mention transitory on Wednesday, right? So basically the market has to reprice that, whether it's going to happen, whether it's not going to happen, market has to reprice that. And I think for, all things being equal, what's a little bit scary is if you think about, look at the commotion that we've seen with just the thought of the possibility of us seeing some hike in 2023 when Powell's already told you that the dot plot, you should take it with a grain of salt. So again, it's showing you how the market is positioned, right? And basically that's all you need to know. So the big question going into this week here is really, are these moves going to extend? Or is the kind of mini panic done? Now, here, if you think about it, and we talked about this also in some of the last updates, in terms of seasonals, we were already going into a period where the market tends to trade a little bit weaker. And as I've been mentioning, very high chance that the week after June quad witching, we trade heavy, right? It's 87%, 27 out of the last 31 times we've had negative week. And also, when we see the market close heavy and down on a quad witching Friday, Monday tends to be down too, or higher chance Monday's down. So all things being equal here, it looks like we should see a little bit more continuation. But I think the big question is you want to watch going into next week is, have we seen the end of it, right? Or is there more to come? As I was saying with some of the guys is, here, what it looks like is just that people have kind of squared up or started taking some positions in. I don't think anybody's really switched in a meaningful way. But if you see the damage that was done on the bond side, right? Especially if you look at the unwinding and you say, you look at the 5-year versus, UBs or ZBs, the big question is that done or not, right? Is that done or not? And if that's not done, or you see people putting on the opposite position, you'll probably see, hear of a lot more risk managers tapping people on the shoulder, asking them to take risk in generally, and in that situation, you tend to get a point where everything gets sold, right? Because people just have to raise some cash and the dollar will continue to stay bid. So that's what you're looking at. But here, clearly, similar to what's happened in the dollar, the risk is on these equities is that basically these failures at highs see a retracement back into broader trend, back into this this trend line we broke out of, right, and into the 200 DMA. Now this week we've also got Powell testifying on Tuesday, so that should be interesting. But the risk is, again, on equities that you see a similar move to what you've seen on equities, what's trying to play out on equities, especially led by the dollar. And here, again, our base case, we had shorts on cable, looking first for a move into this confluence of these moving averages and then into the 200. This is in play. It's a very simple. These are all charts that I've been posting on the blog, and we've been discussing about USD CAD. Now the 200 DMA being in play, and that's the big question, right? And if you look at DXY, as we've been discussing, the velocity of move, the risk velocity of move of DXY is to the upside. And our base case was that when we were hovering here, right, trying to find some direction here, what we said is we believe that we see 91.30 before 88.90, and that's where we thought the risk of velocity of move was to the upside. And here it's just really accelerate completely through knife through butter that 200 DMA, and it's holding bid. So here clearly next week, this could easily come back down into 91.30s, into the 200, and still continue up back into the 93. But what's clear, and what we've discussed a lot in the past, is strong dollar breaks the world. So I don't think we should be talking about crazy numbers in DXY, talking about some people are talking about over 100 again. That, to me, it's far too premature for that. But right now I'm looking at, if this is going to stay and remain a fairly relatively orderly move, well, then I would expect that you see the 93 cap. And if not, if it's a little bit more hairy, then we see us move back into 94.60s, 94.60, 95. But remember, Powell doesn't want a stronger dollar. Nobody wants a stronger dollar. Stronger dollar is going to break everything. So I think as we move higher, right, as we move higher, and if we move higher through that 93, this is, to me at least, is going to be an interesting, very interesting swing fade zone for the dollar, in the same way that this was a fade long. This area is going to be build swing shorts. So, that's what I would be looking for. And in that context, unless this stabilizes, there's really I see no reason to want to step and try and catch a falling knife or come in and buy any of the metals, especially after what China said, right? So we've been discussing this in detail in the webinars too on the blog. They told you, right? They've been telling you, watch out, we don't like high commodity prices. We'll lean into it if we had, use reserves, whatever. So you don't try and catch that kind of falling knife. So right now, in the similar way that whole fade zone in the dollar is key, the equivalent of that is this area on gold, right? So you've got that first level being the that first level being the 93, and then call it 95 if you want. And on GC is the first level is that 1750, and then it's 1700. If we get out of that, then watch out. But that's what I'd be looking at. I don't really look at the transports. I don't know if you have anything specific you want me to look at or discuss, but I don't usually look at them, right? I don't really pay much attention to them. I mean, if you look at the Dow in general, so let's go to the YM. By the way, welcome, Wayne. Good to see somebody's not shy. you know, is being very, very ugly, right? You know, the signs have been there, whether you look at it or not, you know. Yeah, I don't really look at things that way, right? But, you know, Dow's been very, very heavy. A lot of components getting sold hard. You know, internals have been weak for a while, right? Even Friday, you know, if you look at declining volume, very, very heavy. But here, you know, especially Dow, extremely heavy with financials getting whacked, right? So what happened is you had a situation where basically the market was gung-ho on the reopening trades, right? With those financials getting bought, YM getting bought, NASDAQ getting sold. Then you had the little bit of a panic saying, oh, well, you know, doesn't look that way, right? When you had the latest data round. So everybody piled into the new safe haven of tech, right? So everybody unwound all those initial inflation trades after data didn't surprise, CPIs didn't surprise again. And as that unwind was going on, you got the kind of rug pull from the FOMC. But here, I still think the market is really struggling to decide what to do. That's why I think here what we've just seen is we've seen a little bit of shenanigans going through with quad witching. We've seen people cutting positions in what were initially thin markets, right? And then these moves accelerating and people still kind of scratching their heads wondering what to do. You know, everybody go, okay, well, you know, as I said on Twitter, whatever came out of the FOMC on Wednesday, you know, bulls are going to look at it, find a way to spin it in a bullish way, and bears bearish. I think a lot of the people also who didn't want to believe Powell were saying, okay, don't worry. Anyways, we're going to get all the Fed speakers come on deck after Wednesday and talk everything back. Because, you know, objectively, compared to the talk we had before, you know, you can spin it whatever you want, but it's not that Powell was super hawkish, but he was extremely hawkish compared to his usual stance or what he'd been saying, right? The way he answered the questions, the way he answered taper, you know, market's just going to have to deal with it. The fact that he didn't mention the transitory, et cetera, et cetera. But then what happened is on top of it, after the only speaker we got after Powell was Bullard. And of course, he's always like that, but still, he just threw more fuel on the fire. So I think what's going to be interesting here, Wayne, is to see how the market settles now after we've gone through OPEX. But the interesting thing is it has to settle in a seasonal period, which is already fairly bearish, right? And what's going to be interesting is that we're going to potentially have 2 weeks of, you know, not 2 weeks, but what is it? 1, 2, 3, 4, 5, 6, 7, 8 trading days that could be very, very lit, like, because we've got these post-OPEC seasonals. We've got the market trying to figure out what's going on. We've got Powell speaking again, and we're going to be going into month-end, quarter-end flows too. So I think here there's likely the only thing which, and again, nothing is certain, but that we're going to see a lot more volatility, and we could see a lot of funky action in these last 7 trading days, whatever we have. But clearly, in this situation, you know, you don't want to be long anything that's levered, right? So clearly, you know, all the zombies in the Russell, not good. You know, in general, also look at the action that we've seen, you know, all those unwinds on commodities, but also look at crypto, right? Look at Bitcoin. It's been trading fairly heavy, right? It's not the way you'd want it to trade. Ethereum, Bitcoin Cash, Litecoin, it's not what you want to see if you were uber bullish. And again, I still think that here, you know, full disclosure before I get hated on, you know, I'm not against Bitcoin. I have Bitcoin position. I don't have any short. I only have long. But you know, it's a structural long-term position here. But the way it's trading, it really feels like this area, needs to get flushed. And now the key thing is we'll have to see. I haven't seen if MicroStrategy or Saylor has announced if he's finished buying all the Bitcoin he needs to buy. But, right now there's two things which I'd be keeping an eye out for is, again, Tesla's cost average, unless now we see if they've done anything, and MicroStrategy cost average. But here, also if it's Saylor buying here, once he's finished buying, it could be a little bit heavy. So I think there are a lot of things that look heavy, and you just have to be a little bit careful. Obviously, you don't ever want to bet on things moving in a straight line in one direction, right? But you can't discard the possibility of that happening, especially in a short time horizon, right? That's the key thing. So that's what I would be focused on. But again, clearly I think, also you have to pay attention. We had a lot of signs in these past weeks, not only how the market was trading, you had ES and stuff was trading like death, right? Then you had China coming on, talking about them not being happy on the commodity side, what they were going to do. Then you had a lot of Chinese officials complaining about strength of yuan. So, everything was pointing to this kind of move. The charts, the technicals, the news just tends to accelerate these things. But again, I wouldn't be looking at for an end of the world scenario. But comments, questions, guys? Again, I've got no time constraints. I can stay on as long as people are asking questions or people want to discuss interesting things. So if nobody's going to ask any questions, I'm going to shut it down. If people ask questions, I'll continue. Yeah, I think here in general, in the whole oil complex, it's really, really tricky, right? It's really tricky. I think it's the hardest thing if you're trying to look for a correction, whether it's a correction of risk, whether it's a dollar correction, etc. To me, it's the hardest play, right? It's the hardest play. So, let's look at oil. This is easier. You could see here, every single dip has got bought. Right? Remember, even when you had, now it looks like a blip on the chart. Where was it? I think it was here. I can't remember if it was here, maybe it was here, rather. But, when you got that fake headline or, about the sanctions in Iran, which ultimately is going to happen, you see how every dip gets bought. So here is just because, is there structural demand, the bigger commodity, commodity thesis, right? It's just a tricky one I find to get short. Now, when everybody's calling for crude in the 80s and the 90s, do I particularly want to get long here in front of these highs? Absolutely not. But I'm not. I think there are far more interesting shorts than Brent or crude, right? I think as always, either you're looking at a specific chart and you're looking at a specific pattern, or you're looking at a specific theme, right? And usually there are various ways to express the same trade or express the same themes. And what I try and do is I always try and look at the easiest way to express that, where I'll likely get less resistance and where I can get the better bang for your buck, right? Now here, technically, even if you're looking at this chart, you're saying, you've got a negative close at highs. Is it worth getting short, looking for a correction? Maybe, but here the action is so bullish. Do you see what I mean, Mr. Shambles? So here the issue is that and you see how they're bidding it up at the 10-day. So here, even if you're playing for this to come back down. You've got all this buying here. If we break down, you've got this key resistance zone that is likely going to be support. So it's a much harder trade, right, than, for example, assuming on a long dollar play, getting short cable here. Give you another one, even better. Long CAD. Much easier trade, right? Much easier expression of the same kind of trade. So that's just the way. I would be looking at it, right? Any thoughts on VXX? I don't know. What do you mean? I mean, any thoughts on VXX in general? I would say for most retail traders, don't look at it, don't trade it. But that's my main thought on VXX, or in general. I think here, as I said at the beginning, I think we're going into a situation where we're going to see volatility pick up, and we're likely going to see nice two-sided action, or at least markets really open up, ranges open up, especially as we go into this post-quad witching week, as we go into end of the month, end of the quarter. But, if I had to make a bet, higher, sure. But I wouldn't trade it. I wouldn't trade it, right? I wouldn't trade it. Well, I mean, unless your timing is impeccable and you really know what you're doing, but I think there are easier ways to express the same idea without having to deal with decay or nasty surprises or whatever, right? Hey, Said, how's it going? Copper, yeah, I mean, here it's a similar kind of situation here, right? You've got, first of all, we had lumber getting shrabammed, right? And then China came on deck and we got copper being shut. So again, it shouldn't be a surprise what you saw in the metals after China started hitting the wires and what they were saying. But here, it's not looking pretty, right? It's not looking pretty. Here, it's a similar kind of situation, Said, to what we said on all the others. It just looks like the market is ready to take a breather and to see some healthy corrections, right? Now, we're not talking about end of the world stuff, because you see this could still correct down. Hold on. This could still come down another 10%, and it's still into this 200, and it's still a very, very bullish trend. Does that make sense? So, bigger picture, if you look at copper, right, here on this monthly, I mean, let's be clear. This thing could, this thing could come all the way back down and still be uber bullish. Does that make sense? It's just that it's tricky to get all bulled up long into these highs with the kind of stuff we've seen on the wires from China and the general froth. Okay? Now, longer term, in terms of your question, in general, I think here there certain undisputable facts. The world is going to need, whether you're looking at EVs, whether you're looking at tech production in general, etc. The world is going to need more of these commodities, right? So structurally, it's bullish. It's just the question is, do you want to chase these at highs after we've had monster runs, right? Whether you're looking at wheat, whether you're looking at lumber, whether you're looking at copper, whether you're looking at gold or silver. I think that I wouldn't be expecting lumber to get back to those all-time highs anytime soon. And I would not be even if it corrects another 20%, I wouldn't be looking to get long lumber for new all-time highs. But copper, on a nice retracement, maybe down into that 200 or bigger, would I be bullish structurally 1, 2, 3 years down the line? Sure. And I think you have to be on the metals and, on crude in general, on commodities in general. It's just that here, with this repricing that's taking into effect, what's going on in the bonds, what China's been talking about, etc., is just you're getting this slap back of the dollar. So essentially, until this dollar correction, until this dollar squeeze stalls, anything that's priced in dollars, it's going to get smacked. Does that make sense, Said? So it's a question of timing, right? It's a question of timing. It's a question of time frame. But I think here, structurally longer term bullish, but shorter term, I think everything, it's all the same trade here, especially if people are going to de-risk, if, you'll see correlations come to one and stuff just coming. But it's good, right? All things being equal, even if you're a bull, you should be happy because it's a healthy correction. It'll mean that the market, once it corrects, once it stabilizes, it can go back up in a stronger way, right? So all things being equal, copper is probably my favorite one. Silver, I'm not a huge fan of, really. I was long silver, but here I think from a bigger picture, it's just tricky, right? Look at it, especially. And we discussed this also when we had the Reddit, the Wall Street bets kind of drama. But here, somebody's selling you as much as you want, right? And there's a wall there. So I have a feeling that producers are very, very happy to sell you as much as you want back into those back in 27 to 30 range. So here it's just not a chart where you want to be aggressively long. And maybe what we need to do, especially because a lot of these chart patterns, it just looks like we have to flush the excess. So what do we have to do? We have to flush all the late longs, right? Whether that's in stocks, whether that's in commodities, whether that's in everything, or the late shorts in the dollar, and that process, I think, is and that process is in play, right? It started also already in crypto. You could see it on some of the commodities, the dollar, some of the bonds, maybe starting in equities, and once we've flushed these late players, right? And these new gurus, right? Rate players, new gurus, risk-free, no risk, no fear. Once we flush those, then it'll be a healthier market for everybody. But as I was saying, to market can always go up, down, or sideways. But all things being equal, especially if you're an active trader, if we can stay sideways in a bigger range, like for example, even the ES, if it could be, stuck, ideally bigger than this, but if it could be even this kind of range or this kind of range, and we could see a lot of choppy, violent action inside a range, it would be a gift, right? Yeah, and you've seen it. A lot of those days where all the meme stocks where you've had, AMC, GameStop, when all those meme stocks are getting pumped, you see the market is struggling, right? It's like all the attention, all the focus is being pumped away from those, right? But again, it's, you're seeing a lot of, whether you're looking in crypto land, but even if you're just looking in stock land all over the place, you're seeing a a lot of things that are reminiscent of 2000, right? And we've spent the past years also in the webinars, people asking me, does this feel like 2000? Does this feel like 99, 2000? And, I always said the context is different. It's hard to really compare. Also, everybody has different recollection. Everybody was a different trader, even if they were watching it live then than they are now after 20 years. But I have to say that especially with a lot of the TikToks, a lot of the stuff you've seen around, it's really starting to feel a lot like 2000. But remember, things can remain irrational far longer than you can stay solvent. But again, my base case here is not for a massive correction and a multi-year bear market. Could that happen? Sure. But I'm the wrong guy to ask in that way, because if you ask me, anything can happen in my book, right? I'm going to be focusing on the charts, on the levels, and take it one step at a time. Okay. Any comments, any questions, anything else anybody's looking at? Any chart anybody wants me to review? Don't be shy. As long as people are asking, I'll stay on. If not, we'll call it a day. So last thing, giving people a chance, but I would really also keep an eye on, primarily you want to keep an eye to see how this, if you see the unload on the bonds is done, right? Especially the pain 5s and 30s. If the pain is done, because if the pain isn't done, you would expect to see a lot more follow through. And remember that next week already, the stats in terms of seasonals, in terms of the way we closed on Fridays, don't bode very well for the open. But the big risk is that if we get an ugly Monday, we go into Tuesday, we've got Powell, you might get a little bit of a stick safe. AUD. Aussie. What's going on Aussie? Well, Aussie here is just kind of sideways. Everything's pointing to the fact that it could easily come back into the 70 mark, right? I think, as I've been discussing a lot, to me, the easiest trades, or not easiest, rather, sorry, the most asymmetric opportunities to play for this dollar strength were on USD CAD long, GBP USD short. These were a lot more messy because the stop placement was trickier. The ranges were wide. If you see Aussie and Kiwi, basically, we were stuck in these ranges going nowhere, right? And the stop placement on any shorts was tricky because you see this trying to hold here. You had highs here, trying to put in some kind of head and shoulders, but it's just the stop placement I found tricky because even if you traded with a tight stop, you could have got stopped out many times and it could have still held this broader topping pattern. So here, this is ugly, right? Below 0.75 is ugly. You can look at it on the weekly too. You've got the 50 week coming in, trying to stall it here. But back on the daily, as long as you don't get a daily close back above the 75 and the 200 DMA, then you would expect any bounce to get sold for this to continue, because you see there's nothing much here at all, right? For this to continue and try and puke back down into the 70 mark. And, if we get risk bounce in general, things stabilize and we get a close above the 75, a close above this 200, and you see, like we've seen, Wayne, like we've seen in the past, like maybe a headline, the cavalry coming back in, indices start to rally hard. This is probably a very nice trade for a short-term rip back into all this confluence of these moving averages around the 77. So, on stabilization above the 75, there may be a nice trade back into 77, but as long as it's below, it looks like the 70 mark to me. This is something I personally wouldn't be trading because I think the stop placements are tricky, and the velocity of move, even if you get a little bit of a bounce in risk, I'd get much better bang for my buck getting long equities intraday than trying to get long this, especially with the way metals are trading. There's just too many components here that could hit on this, both to the upside and the downside. So I think here, and as we've been discussing, FX has been less and less interesting, right? Because you're able to get much better bang for your buck on the indices right now. Gold is at 61.8. Yeah, I discussed gold earlier. Does that hold any value to me? No, not really, in the sense that the only thing I was saying is when you see gold. So first of all, this is not a fib move I particularly like to fib because it's very congested, right? It hasn't made, so I assume this is the fib move you're talking about, right? And it's very congested. You still have all these higher levels here. So to me, it's not a fib I'm particularly fond of, right? When you see a move from A to B here, you see what happened. Who asked this? Mr. Shambles, right? Did Mr. Shambles ask this? Yeah. You see, just give me a yes or no. Do you see how the market here tried to front run the 50 back and you got aggressive bids coming in? Right here, buying it the first time around. So here, when that happens and the market can't rally off and retests those lows and takes out the 50 back, right? There's an extremely high chance that the 61.8 gets tagged or that the tight stops below that gets flushed. So our base case, once we saw this, the webinars is, okay, if you want to buy this, you're waiting for it lower. If not, you're selling this looking for the 61.8 to get tagged. Okay? So right now, the only real significance to me the 61.8 has is that it could be kind of pivotal between the 50 and the 78.6. But really, to me, what's far more interesting now is this psychological level, this pivotal level we've seen before, which is 1750. And then in terms of fib levels, the 78.6 is the one that's interesting for me. So that's what's a lot more interesting. Now, also the 50, but also you see it's coming in line with these moving averages. So right now, in terms of level, I'd be more focused on the 50, on the 78.6, and the 750 in the middle as a pivotal level, as it's already marked on the screen. Okay? I hope that answers your question. And then we have, hey Don, how's it going? So FCX chart. We talked about copper earlier. I don't know if you were in here yet, but do you have a specific question here on Freeport? But basically here, it's going to trade with copper, right? It's going to trade with the metals, right? So it's a similar kind of discussion. And I don't know why I have levels here. We probably looked at this before, but basically, the way I would look at this here, and let me just clear this up. What I would say at first glance is that a couple of things come to my attention, right? The first is the fact that, see, we broke hard here, right? And this is a very ugly break with a gap down, right? So if I had to have some lines here, just for funsies, what I would have is I would have this up, right? For those of you who like diagonal lines, I'm not a huge fan of diagonal lines. I prefer to look at it in the context of just the fact that now it's very heavy and that likely here This will be a magnet to the upside, and the key test is if you see sellers here. So the way I'd be looking at this is you see also how this previous high here is lining up with this big reversal, gap down, bam, positive close, gap up, very sharp. So you see how this is coming in line with the 200, maybe psychological 30 mark. So here I think that if it gets back above, if I had to buy this, I would be looking this to give you an idea how I look at things. I would either try to look to buy some kind of stall or stability above the 30, or I'd want to see it close back above the 100 DMA for a tactical play to go and fill that gap. Longer term, years wise, I'd still be very bullish all these metals, especially something like FCX. But right here, I think you have to be a little bit careful because, we were trading in nosebleed territory. And you see here is just, this is basically one-way train, huge rip, right? I mean, you have to remember where these things are coming from, right? And you see here a lot of panics. But, don't forget that, these things, even at the beginning of the year, we're in the mid-20s. That's huge moves, right? Huge moves. Okay? Good stuff. Any comments, any questions? Anything else anybody wants to look at? Hey, Daniel, how's it going? TLT. Do you have a specific trade? Are you looking for something in particular here? I mean, again, really you have to watch the bonds here this week. And, on something like TLT here, as a lot of the others, you still have room to squeeze. The big question here, have people gotten caught off guard and they're just, hey, thank you, happy Father's Day to you too. Have people just been caught off guard, right? And they're just getting squeezed out of positions, people are getting tapped out? Or are people, flipping, right? That's the big question here. But really, the danger here is that it continues to squeeze in a brutal fashion, right? Now, I personally prefer to trade the futures, so either, the ultras, the 30-year, the 10-year, or the 5-year, whatever. But here on TLT, when you see this kind of action, Daniel, where you kind of see these wicks and then we close higher, that's really squeezy action, right? It looks like on any kind of downtick, any move down, trapped shorts are thanking God or lighting little candles and getting out, right? So this is still very much squeezy action. So famous last words, but it is rare that unless there's a headline that all of a sudden after this kind of close, this completely dies, right? Chances are you need to see more upside and a little bit, more exhaustion to the upside. Maybe, big candle to the upside and a negative close on the daily. But right now it looks like it's still attracted to the upside. So I don't know if you were looking for longs or shorts, but here it's similar to what we were discussing. Do you see here? Do you see this gap up here? So this is on the 15th of April, right? You see how, so what we've been looking at, whether we're looking at ZBs, UBs, we're looking at that range on that day. And you see here what's happened. Once we broke, the market was really smacking it down, holding it inside this April 15th range. And now that we're outside, the risk is really for a big squeeze because sometimes, markets can correct sideways. So it's generated a lot of energy here, right? Similar thing on ZBs, right? So unless they get smacked back down into this area, so we can call it here on TLT, we can call it this zone, chances are that this could still be basing higher, right? Technically. Now, I wouldn't be surprised if ultimately they all get smacked back down and they're all in that range and we go nowhere as everybody's still, as the Fed does a lot of, jawboning and wheeling and dealing. But right now, if we're trying to take our bias out of the equation or not think about what we think the Fed is going to think about doing or talking about, here these breakouts is bullish and it looks very squeezy. So it looks like there's more pain to be done. But as I said also before, it's also tricky when you're trying to read too much into stuff when you're into quad witching, right? So here we've got quad witching. Then next 7 days we're going to have end of the month, end of the quarter flows. It could be very, very messy. I think these next 7 days are going to be very interesting, and I'd really encourage people to focus on trading the numbers, the levels, the technicals, and worrying about everything else after we've gone through this seasonal period of the week after June quad witching, and once we've gone through month and quarter end flows. And then, we got a month maybe in limbo. We'll have to see what all the FOMC guys say. And then, we've got Jackson Hole to look forward to, which depending on how the market trades in the next couple of weeks, they could, flip, it could be anything could be coming out. Make sense? That's the way I'm looking at it. Okay. So how long? We've been going for 55 minutes. So guys, comments, questions, anything anybody wants to look at, anything anybody wants to discuss? Again, I know nothing. I'm no genius, but in general, take advantage of it. I've been doing this for a long time, so if you have any questions, anything you want to be discussed, don't hesitate to take advantage of my time here and ask questions. If not, I'm going to call it a day, and we'll try and do this. It's funny because people wrote in asking me instead of doing it on the Adobe to do it through YouTube. So let's see. If people like it, I'll do this. Again, my commitment this year is to once a month to do this and do a Ask Me Anything session or just show up and take questions. Thoughts on repo and 8 billion a day now? Zero thoughts. I just look at the pivotal levels. I look at the charts. I look at what price is doing. I try and find an asymmetric opportunity to express a view or express a trade. I hit it. If it works, it works. If it doesn't work, it doesn't work. I couldn't care less. I know that if I keep on trading the setups I trade, the ranges I trade, with the risk reward I trade at the end of the year, I'll be fine. So I'm really no thoughts there. I know people like stories and thoughts, but especially on that, whatever. Okay, last call, guys. There are plenty of people on Twitter that are far more knowledgeable and talk about that. But, all these things, Mr. Shambles, what I've found over the years, and again, I've been at this for decades, is that the guys with the best understanding of the macro, of the current narrative, of the pipes of the system, etc., have never usually been the best traders, right? So usually people who are really good at telling stories are good at telling stories, right? Or people who are really good at analyzing the plumbing are really good at analyzing the plumbing. But I've rarely see that correlate to extremely good trading results. I think you have, so unless, but again, I don't pay much attention to all that. Okay, guys, going on an hour. Questions dying down. Thank you so much for the guys who decide to stop by. Thank you for the questions. Again, I'll do this again in a month or so. As usual, I don't mind if 100 people show up or 10 people show up or 5 people show up. I'll still do it. It's important for me to give back, give some time. So again, have an awesome one. Have a great Father's Day, and see you back next month if you want to join in. Take care, guys. Bye-bye.